Welcome to all joining us all over the world. I am Bruce Murray, chair of our Democrats Abroad Global Progressive Caucus. On this Juneteenth, we are pleased to welcome Professor Gabriel Zucman, renowned economist from the University of California at Berkeley, who will speak to us about fair share taxation and enforcement. Our interest in this topic is driven by the outrageous wealth inequality that plagues our society. For many of us, it is the root cause of so many problems we confront today. As the National Women's Law Center asserts, 85% of the 400 wealthiest Americans on the Forbes 400 list are white men, driving headfirst into piles of wealth like Scrooge McDuck. Our current tax code exacerbates racial and gender inequality, hinders economic growth, and sharply limits the tax revenues available to make investments in women, people of color, and all of us everyday people. Well, enough is enough. It's about time we make the uber wealthy pay their fair share of taxes. Can you imagine the world we could all have if billionaires are taxed more fairly? Imagine affordable childcare, paid family and medical leave, better access to aging and disability care, higher pay for care workers, and reparative justice.
Okay, we're going to co-sponsor with the LGBTQ plus caucus a June 24th event with Tammy Baldwin, our Wisconsin senator and progressive champion. And that looks forward to be a very good event. Also on July 1st, we have our Pro-DA monthly members meeting, which is every month. And we have in July and August monthly Monday summer sessions. On July 31st, we're planning a global event, Trans Rights Are Everyone's Rights. In August, we deal with our unfinished business, including our AGM resolutions, keeping fossil fuels in the ground, support the 21st Century Economic Bill of Rights regarding the use of funds, from undisclosed sources, and to recognize Alaskan Indigenous sovereignty. Sorry. Now I'm going to turn over to Antar from the Reparations Task Force. Antar.
I also do not see Antar in our participants list right now. So
nope, actually, they are here under Caitlin, but I can't spotlight them. Sorry, Bruce. Oh, now I can.
Here.
There we go. Thanks for your patience, everyone. We seem to be having more technical issues than
get my
usual.
talking points up.
Hi, Antar. We see you.
Excellent. Cool. So, I know Betsy just passed it off, so I just want to speak a little bit about today, very, very briefly. Today is Juneteenth. It's a day that we recognize not only as a day of celebration or commemoration, but more importantly, it's a day of action, a day of emotional and emotive appeals for. And just because we have this day does not mean the story's over. We're not looking for performative wins. We're looking for hard wins with closure and unity for the entire country. In order to do that, we need to substantiate our demands with action. And thus, no action will meet the demand short of a federal reparations commission, something to really seal this wound, heal this wound from slavery, Jim Crow, and the resultant modern day disparities. Only a federal reparations commission can do this, and this can realistically be done only through an executive order that President Biden can sign today. And he knows he can do this because activists, community organizations, civil rights groups, churches, synagogues, political action committees have been bombarding the White House for the last 2 weeks, and especially today with marches and protests all across the country. Federal Reparations Commission would examine U.S. government complicity in the abuse and exploitation of Black people over centuries, as well as the growth of the U.S. financial industry and wealth off of expropriated Black labor. Economists have calculated at least $14 trillion will ultimately be necessary to close the Black-white racial wealth gap, which currently exists in America today. In order to advocate for such a form of repair, we're going to need to have our own tax system ameliorated. We need fair share taxation in the nation and the wealth tax to ensure that all Americans are paying their fair due, especially those on top whose wealth was accumulated and built within a capitalistic system whose very existence owes its survivability to this day off of generations of unpaid labor and economic, physical, spiritual exploitation of those who were enslaved in the US. Yes, I am talking about Black people. Calls to action include contacting the White House and urging Biden to enact a reparations commission at the federal level via executive order. And we can also do this through emailing and basically any way you can, by any means necessary, reach out to the White House, literally by any means necessary. So going on the website, leaving a message, emailing, bombarding his Twitter, Facebook, making it extremely clear that the only way to heal this divide is with a federal reparations commission. And in order to lay the groundwork for that federal reparations commission, we need to improve our taxation system. And I believe that's why we're here today. And I hope, thank you.
Thank you very much, Antar. And with that, I'll turn it over to Max, who is going to introduce our speaker today. Max?
Hello. So when we file the Financial Crimes Enforcement Network Report 114, the FBAR, we can get the feeling that Americans overseas are treated like potential criminals while offshore wealth escapes accountability. Our guest speaker has been working to change this through research and advocacy for U.S. and multilateral tax policy change. He is the leading authority on issues of wealth inequality and taxation, and his work uses administrative data, historical data, official statistics, and all sorts of leaked documents to understand the failings of the tax system and how to design better ones. He's the author of The Hidden Wealth of Nations and co-author of The Triumph of Injustice, which shows how our tax system is not equipped to tax billionaires. Notably, that second work inspired the wealth tax plans of Senators Sanders and Warren, and came with a policy simulator you may have used to compare the tax plans of candidates in 2020. His proposal on capital gains withholding for the ultra-rich nearly made it into Build Back Better, and his most recent proposal with the EU Tax Observatory is on taxing excess profits. He is a professor at the Paris School of Economics and Cal Berkeley, recent winner of the Clark Medal, known as the Fields Medal of Economics, and he's going to help us tax the rich. It's my great honor to introduce Professor Gabriel Zucman.
Thank you so much, Dan. I trust you can hear me well. It's a great pleasure to be with you today, and I look forward to the conversation. So I'd like to talk about two things in these introductory remarks, and then we can cover other themes that are of interest to you. So I want to make just 2 points. I want to talk about issues that are very important for Americans living abroad. And this is the issue of how to tax non-resident Americans and how to fix FATCA. So 2 points I want to make are that, number one, the proper way to tax non-resident Americans is neither full citizen-based taxation nor full residency-based taxation, but it's a middle ground that I'm going to describe. And number two, I want to explain why the US should join the global standard for the automatic exchange of bank information. So starting with the first point, what you have to realize today is that the way that countries tax non-residents is one of two extremes. So on the one hand, you have the case of the US. So in the US, someone who's a US citizen, let's say someone who was born in the US, but then left the US, let's say at age 2 months, and never sets foot again in the US, then despite that, because that person is a US citizen, that person has to file taxes in the US and pay taxes until death. And that's very extreme. That's one extreme. What other countries do is the opposite extreme. So take the case of France, for instance, and most other countries follow the same model. Someone who has spent his or her entire life in France, let's say 70 years, and has become a billionaire in France, and then chooses to move abroad, to move to a low tax country to avoid taxation. Then starting January 1st of next year, immediately after the departure, that person doesn't have to pay taxes anymore in France. That's extreme in the opposite direction. What I want to explain is that the ideal solution is a middle ground. The ideal solution is for countries like the US or France and all other countries to keep taxing their expatriates, people who have been living for a long time in their country, for a number of years after they leave. And that number of years could depend on the number of years that they have been residents in the first place. So let me give us a number of examples to illustrate what that means in the US context. So take the case, for instance, of, let's say, John. John is a US citizen. He has spent 40 years in the US. He has become a billionaire in the US, and now he decides to move to Singapore. In the system that I described, that person would have to keep paying taxes in the US for a number of years. We can discuss whether it should be 5, 10, 15, 20 years, to be discussed. But that person should have to keep paying taxes in the US with tax credits, of course, to offset any taxes owed and paid in Singapore. Example number 2, let's take the case of Sarah, British student who comes to study in the US, spends a few years there, and then gets back to Britain. In the system that I described, that person wouldn't have to pay any taxes in the US after her departure because she spent only a few years in the US. And number 3, let's take the case of Patrick, a US citizen who spent his entire life in the US, but now chooses to retire in Spain. But Patrick is not very rich. And so in the system that I described, he wouldn't have to file taxes in the US, to pay taxes in the US after departure. So we can imagine a broad exemption for filing taxes in the system that I described, and we can discuss the specifics of that exemption. Here I put some numbers just to fix ideas. We could say that, okay, someone who's been a long-term resident in the US but then moves abroad would be exempted from filing taxes in the US if that person has, let's say, less than $500,000 in income and less than $10 million in wealth. So let me talk about the advantages of this solution. It fixes essentially all the problems with the current system of citizen-based taxation. It also addresses the issues with the classic residence-based taxation systems that exist elsewhere. So number 1, it fixes the issue of accidental Americans. In the system that I described, if you've spent very little time in the US, even if you're a US citizen, you don't have to file and pay taxes in the US if you live abroad. Number 2, it would lead to a dramatic simplification of taxes for non-resident Americans. There would be no filing or taxes owed for the vast majority of non-resident citizens. Number 3, it addresses the risk of citizenship renunciation. In the system that I described, you cannot avoid US taxes if you're very rich and you renounce US citizenship. Because what matters is not citizenship, is how long you have spent in the US as a resident of the US and whether you've become very rich while living in the US. Number 4, the system that I described would remove incentives for rich people to move to low tax countries. because any tax saving would be offset by higher taxes owed in the United States. And so it undermines international tax competition. It removes incentives to move abroad to avoid taxation. So what I want to say is that this solution, in my view, is the one that Democrats abroad should be advocating for. Next slide. So it's a new idea. I don't think that it's been proposed by, at least with those specifics, by anyone. And because it's a new idea, it will probably take years before it's accepted. But I want to emphasize that the underlying logic is very strong. The logic is that if you've become very rich in the US, that's at least in part because you've benefited from US infrastructure, from US schools, from the market, from US public goods and services. And so it's perfectly normal that the US should ask you to keep paying taxes at least for a few years after you move. There is just no natural right to become a billionaire, very rich in the US, and then to become fully exempt from any taxes in the United States. So the logic is very clear. But vice versa, if you've not become rich in the US, or if you spend only relatively little time, just 2 months, you were born there, but then your parents moved away when you were very young, why should the US keep taxing you forever? It's difficult to understand. So the basic idea of the proposal that I'm formulating here is that what should trigger taxation for non-residents is not citizenship, but is how long you've been a tax resident in the US and whether you've become rich while being in the US, not citizenship. My prediction is that this system will actually become the norm globally in the coming decades. I don't know how long it will take, but my prediction is that this will become the standard because it is the most logical way to tax non-residents. It addresses international tax competition. It ensures that wealthy people keep paying a decent amount of tax, even if they move to a low tax country, while minimizing burdens for the rest of the population. All right, so that was the first point I wanted to make. Second point is about FATCA. So as Americans living abroad, you're all very familiar with this. And what I want to say is that the United States has played a crucial role by enacting FATCA in 2009, in the sense that this paved the way for a new form of international cooperation, which is the global automatic exchange of bank information. So now many countries emulate what the US is doing with FATCA through an international standard, which is known as the Common Reporting Standard, CRS. And the US was really a pioneer in leading to that new form of international cooperation, international tax cooperation, which in my view is a big progress because it makes it much harder for wealthy individuals to hide assets in tax havens. But then there was a big problem, which is that the US refused to join the Common Reporting Standard. And so now we're in a situation where two parallel systems coexist. There is FATCA for the US, there is the CRS for all other OECD countries and many developing countries. This creates a lot of complexity. This creates a lot of anxiety for Americans living abroad. And this also leads to some fraud that I'll explain in a second. I want to emphasize that there is no good reason, there is zero valid reason for having these two parallel systems. They essentially try to achieve the same thing, which is an automatic exchange of bank information. There is no reason to have two different systems. So the US must join the Common Reporting Standard. And once it has joined the Common Reporting Standard, then it can abandon FATCA. So what are the problems with FATCA? Explained on the next slide. The problems with FATCA is that, as you know, as you're, I'm sure, very familiar, because the US has its own specific idiosyncratic standard, it generates some compliance costs for banks, and some banks have responded to that by kicking out Americans from their customers. So by closing accounts for American customers. Number two, this is primarily a burden for middle-class Americans, some of whom have lost access to some financial services outside of the US, but certainly not a burden for the super rich, who have access to plenty of numerous banking opportunities. Number three, and that's a critical problem, FATCA is actually a weaker standard than the CRS in the sense that it is asymmetric. The US receives quite a lot of information from foreign countries, but it sends very limited information to foreign countries. In particular, when bank accounts in the US are held, as is frequently the case for tax evaders or for money laundering, when bank accounts in the US are held through shell companies, the US authorities typically do not try to identify the beneficial owners of these assets, and they do not send the relevant information to foreign tax authorities. This makes it possible for wealthy people, for tax evaders, to hide assets in the US. This means that relative to the CRS, the Common Reporting Standard, FATCA actually facilitates fraud by wealthy foreigners through the US financial system. That's not acceptable. So what would be the advantages of joining the CRS described on the next slide? Number one, it would be harder for tax evaders to hide assets in the US. The Common Reporting Standard is a stronger standard that forces financial institutions to identify the beneficial owners of the assets that they manage, even when those assets are held through shell companies, through trusts, through foundations, and other intermediaries. Number two, if we had one single standard, it would reduce compliance costs for banks. And so there would be no reason anymore, no reason anymore for financial institutions to discriminate against US customers living abroad. So it just makes the life of US citizens living abroad much simpler. Number three, I want to emphasize that a blanket repeal of FATCA without joining the Common Reporting Standard would be a terrible idea, because the automatic exchange of bank information is critical to ensure tax compliance, to limit tax evasion through offshore financial centers, and also to enforce the type of taxation of non-residents that I described at the beginning of my remarks. If the US wants to be able to keep taxing very wealthy people who've spent a long time in the US and now move abroad, it's important that the US keeps receiving information from foreign countries' tax authorities. So my second point is that Democrats abroad should advocate very forcefully for the US to join the Common Reporting Standard. And once this is done, there would be no reason to have FATCA anymore, and FATCA can be abolished. Thank you very much, and I look forward to your questions. And during the questions, we can discuss other aspects of tax policy in the US, of the rise of income and wealth inequality, among other issues. Thanks a lot.
Professor Zucman, thank you very, very much for focusing in so excellently on Democrats abroad and our issues and concerns. I'm going to turn it over now to our co-chair of our monthly Mondays for Progressive Minds, Betsy Atora, who's going to lead the prepared question portion of our question and answer period. Betsy, over to you.
Thanks very much, Bruce. Susan DeTrevo, you have the first question. Can you please ask that question now to Professor Zucman?
Yes, Betsy, thank you. And thank you very much for this fascinating talk. It seems to me that tax design that along the lines that you discussed in your 2023 NBER working paper would have the potential to facilitate movement toward this global norm that you're describing. And by the way, you've got the Taxation Task Force 100% behind you of Democrats abroad. And also reduce some of the unintended consequences that have emerged as a result of tax and policy design that was intended to prevent tax evasion by ultra-wealthy US residents. And so some of the things that, as you mentioned, that the middle class is bearing the burden of the efforts of the US to go and find the wealthy people and make them pay, so that we're facing high compliance, complexity, lack of access to bank services, inability to save for retirement. We've got to kill these PFICs. And also the tax revenues come primarily from double taxation and IRS penalties. Very little comes from, basic taxes for those who do not live in the United States. And wealthy individuals can pay for the compliance, and they can safely make it through things like PFICs and avoid double taxation, but we're not able to do that. So I just was very interested in taking some of the ideas, like when you observed what happened in France with tax design, and could we use that to make this happen a bit faster? Sorry, that's kind of a long question, but it got somewhat edited after I saw your slides.
Yeah, thank you very much. It's a great question and very important question. So you're absolutely right that the issue of how to design taxes well is fundamental. In addition to, and irrespective of what the tax rates are, we want a sound design. And for the specific issue of taxing non-resident Americans, the best design is the one that I explained in my remarks. And let me emphasize a couple of points. So I've been thinking about these issues for a long time, both from a research perspective, but I'm also interested personally in those issues. I'm both a French and US citizen. I've spent about half of my adult life in the US, about half in France. So I'm very familiar with the problems and the complexities of filing taxes, US taxes while living abroad, and the problems that you described with potential double taxation and all of that. I'm very, very familiar, both from a personal perspective, but also from an intellectual research perspective. And what I want to say is that there is one logical, sound, comprehensive solution, which is the one that I described. And I want to make sure that everybody understands, because I think it's really important for people like you, for Democrats abroad, to put that solution on the map, to advocate for it forcefully, so that it becomes reality, because it's actually doable, it's actually feasible. And the logic is, if you've been a resident in the US for a long time, we can discuss what this means in practice. Is it 20 years? Is it 30 years? But you've been a resident in the US for a long time, no matter what your citizenship is, forget about citizenship, but you've been a tax resident in the US for a long time. You've lived there for a long time. Number one. And number two, you are rich. You have a lot of wealth. We can define, we can debate what this means, but let's say, to fix ideas, you have more than $10 million in wealth. or you have more than $500,000 in income. So you are in the top 1% of the income distribution. Then if you live outside of the US, you should have to keep paying taxes in the US for a number of years. I'm not saying necessarily until you die, but it could be during 5 or 10 or 15 or 20 years, depending potentially on the number of years that you've been a tax resident in the US. And why is it very important? It's very important because it removes any incentives for wealthy Americans to move abroad for tax reasons. So it really undermines the logic of tax competition. It will also makes it much easier for the US to have a wealth tax, for instance.
Right.
Because wealthy people could not avoid the wealth tax just by moving abroad. They couldn't even avoid the wealth tax by renouncing US citizenship, because in the system that I described, citizenship doesn't matter. What matters is you've become a billionaire in the US, well, the US is going to keep taxing you for a few years. So I think that's the right system. But at the same time, as I said, for people who are not very rich, or for people who have not spent a lot of time in the US, there's no good reason for asking those individuals to keep filing taxes in the US until they die. There's just no good reason. So we need this middle ground, common sense policy. So I really hope to be able to convince you that that's the way forward. Let me emphasize.
Totally
One
convinced.
more thing.
Yeah.
One thing I want to emphasize again, because it's important. I'm not aware of anyone or any group that actually advocates for that specific idea. It's actually a new idea. And because it's a new idea, in my experience, it takes time for people to understand. It takes time for people to accept it, to see the merits. And so there's a lot of pedagogy, to be made. There's a lot of explaining that needs to be made. And I think it's going to be very important for people like you to do this in the coming years if we want to see any progress.
So one thing that might be interesting, I serve as co-editor-in-chief of the Journal of Operations Management, which is a Financial Times 50 journal. And we are currently working on an editorial on this topic. As far as I'm concerned, this is the only way, what you propose is the only way forward. And the how, which comes back to tax design, is I think the fastest way to get there. So it's true that a year ago, we weren't really talking about this, but enough has happened. Things have gotten bad enough that it has encouraged a lot of people to look for compromise. And from where I'm sitting, I see compromise coming together. So let's make it happen.
Thank you very much, Professor Zucman and Susan. Okay, we have a second question, and that is from Eric Kopel-Ekval. Eric, could you please ask your question to Professor Zucman?
Sure. My question is this: with progressivity in mind, how would you compare your proposed approach to tax residency termination to countries such as Canada, which has a deemed disposition tax?
Yeah, great question. So many countries have some forms of exit taxes where people who leave have to, they have to pay some taxes either at the time when they leave the country, a straight exit tax, or sometimes they have to pay some taxes even after they've left, when they realized capital gains, when they sell assets after departure. So that exists. The system that I describe is much more comprehensive than that. Because what I say is that if you're rich enough, if you're above a certain threshold, you have to keep filing taxes in the US and pay taxes on your entire income, not just realized capital gains, but you have to be treated as if you were still a US resident, just like in the current system. So there's no double taxation in general, because you get credits for taxes that you pay in your new country, so that if you move to a relatively high tax country, typically you're not going to owe a lot of extra or even positive extra tax to the US. If you move to a low tax country, on the other hand, you have to pay extra taxes in the US on any form of income that you earn in your new country. Not only realized capital gains, that's really the critical difference. Not only capital gains, but any new income you earn, dividends, interest, wage income, business income. If you're rich enough, you have to keep paying taxes on all that income in the US with credits to offset any double taxation. So it's much more comprehensive than the Canadian system or all the exit taxes that currently exist.
Thank you.
Thank you very much, Professor Zucman and Eric. The next question is from Sue Alkness, who is the vice chair of ProDA. Sue.
Thank you so much. I wanted to ask you to say a few words about how extreme wealth inequality is in the United States, and what kind of concrete difference a wealth tax that's effective could make for everyday Americans. Thanks.
Of course, and indeed the rise of wealth concentration has been a defining characteristic of the last 4 decades. One way to summarize what has happened is to look at the share of wealth that's owned by the top 0.1% wealthiest families, who have about $50 million or more in net wealth today, total assets, net of debts. So, of course, a small group of the population, 1 out of 1,000 Americans, that group of the population used to own about 6-7% of total US wealth in 1980. And today it owns close to 20% of total US wealth. 20% is about as much as what the bottom 90% of the distribution owns. So to summarize just in one sentence, 90% of Americans, the bottom 90% of the distribution, of the wealth distribution, own in total about as much wealth as the 0.1% wealthiest Americans. The rise of wealth inequality is a global phenomenon. We see it in many countries, but it's been particularly fast and extreme in the US. Okay, it's not the case that inequality has increased at the same pace everywhere. Income and wealth inequality has increased particularly fast and strongly in the US, much more so than in continental European countries or countries like Japan. The most logical, straightforward, and direct way to address the rise of wealth concentration, to reduce or to stabilize, depending on what your objective is, to stabilize or to reduce wealth concentration, is with a tax on wealth itself. Why? Because when you're very rich, it's very easy to structure your wealth so that this wealth generates relatively little taxable income. And that's the reason why, in reality, you have super wealthy Americans, like billionaires, who can end up paying very little, or in fact, sometimes zero income tax, because they put their wealth in assets that do not generate taxable income. For instance, in companies that do not distribute dividends. And we've seen that, for instance, a couple of years ago with the leaks from ProPublica that revealed how some of the wealthiest people in the country sometimes paid almost zero, sometimes exactly zero in federal income tax. And that's the problem with the income tax. When you're very rich, you can find ways to report very little taxable income. That's why in an ideal tax system, you have not only an income tax, which is very important, of course, but also a progressive tax on wealth. Because, to put it very simply, income for super rich people, income is not very well defined. Income is relatively easy to manipulate, but wealth is well defined. Wealth is hard to manipulate. You own 20% of Amazon. We know basically each and every second what's the value of your wealth. And so that's why a wealth tax is actually the proper way to tax the super rich.
Thank you so much. Now we'll go to the audience questions, and we have a queue. And Daniel Stein, would you like to ask your question?
Sure, thanks. I'm just wondering if by any chance the proposals you have made are affected or changed for folks who are what I guess is popularly called digital nomads, or basically people who earn US dollars but do not reside in the US. I don't know if that changes anything, but I'm curious if so.
Yeah, great question. I mean, the proposal would also apply to them to the extent that they qualify for having to keep paying taxes in the US. So again, the two rules to qualify are, number one, have you lived in the US for a long time? Yes or no? Have you been there for more than 10 or 20 or 25 years? And second, are you rich? Do you have a lot of income or a lot of wealth? So if those two conditions are verified, you've been a long time resident, and your income and your wealth are above some threshold, then you should have to keep paying taxes in the US for at least a number of years after you move out of the US. Digital nomads, if they don't have a lot of income, if they don't earn much and don't own a lot of wealth, or if they've only been in the US a few years, they came to study, for instance, and then they moved away, then I don't see why they should have to keep filing taxes in the US forever.
Okay, thank you very much.
Daniel, would you like to take over the queue now that you asked your question?
Sure, I believe the next person was Ed Unger. Ed wants to unmute and go ahead and offer up a question.
Well, at the meeting, I'll just mention we want to try to keep our questions as quick as we can because Professor Zucman has a hard stop just a little bit before 1 o'clock. Thank you.
Okay, try to make it relatively quick. And I'm very heartened by your proposal. It sounds like a part of it is designed to maintain the possibility of an effective wealth tax, preventing say a very rich person to join the founder of Virgin Airlines on his tax-free island in God knows where, off Bermuda somewhere. However, two questions. One is very simple and very quick right now, and that is the IRS right now is very good at coming up with forms, tax forms. It's one thing it does well. Would you advocate a very simplified half-page tax form for the overwhelming majority of Americans outside the US who do not owe anything or very little to the US in taxes right now because it costs them $2,000–3,000 a year often to find somebody with the arcane knowledge to help them fill it out. So that's one. And number two, the idea of exit taxes. And how many trillions of dollars would be saved for the US Treasury if in fact an effective wealth tax were put into effect?
Yeah, great questions. So on the first question, yes, I'm in favor of a dramatic simplification for the vast majority of Americans who live outside of the United States. If you have less than a certain amount of income and less than a certain amount of wealth, then you should only send, a one-page form that certifies, that says, well, I have less than, let's say, $500,000 in income, and I have less than, say, $10 million in wealth. Therefore, I don't have to file and pay taxes in the US. Okay, so I think that if you're not very rich, then the only thing you should be required to do is just to certify that you have you're not super rich, and so in the system that I described, you don't have to file taxes in the US. So really a dramatic simplification for more than 99% of Americans living abroad. I do think that if you're very rich, you should still have to pay taxes and file everything, as if, at least for a number of years after you left the US, to limit the possibilities of tax avoidance by very wealthy Americans. And on the second question, we've done a lot of work with my colleague from Berkeley, Emmanuel Saez, on quantifying the revenue potential of a wealth tax, a progressive wealth tax. So for instance, if you tax wealth in excess of $50 million, meaning if you have 50 million or less, you pay zero, and you only pay if you have more than 50 million, with rates that could increase to 5, 6, 7, 8% for people who have billions or tens of billions in wealth. The revenue potential of such a wealth tax is gigantic. Even though it's only on a tiny fraction of the population, typically less than the top 0.1% of the wealth distribution, we estimate that it could generate of the order of $4 to $5 trillion over the standard 10-year budget window.
I'm going to jump in. This is Bruce Murray again, chair of ProDA. What you said is also, I think, a critical focus of what we progressives find most interesting. That is trying to move that Overton window a little bit. The Republicans consistently try to move it so that we can only see lack of resources and the need to decrease the size of government. And what you're saying is we need to change that focus, move the window so that we see more the need and the easy ability to generate more revenue so that we can make Social Security solvent, that Medicare financing is no problem. Do you have any ideas to help us move that window in our messaging and also aligning ourselves with electeds and NGOs in the United States who are effective at that?
Absolutely, yes. I think what's most important is to explain the need for wealth tax. And the need for wealth tax is clear, and there are two main reasons. Number one is the dramatic increase in wealth concentration that I mentioned. And number two is the lack of progressivity of the US tax system. If you take a comprehensive perspective on tax progressivity in the US, meaning you take into account all taxes paid at all levels of government, and not only federal taxes, but also state and local taxes, and not only the individual income tax, but also payroll taxes, corporate tax, property taxes, the estate tax, and everything. If you take everything into account, what you see is that middle-class Americans typically pay around 25 to 30% of their income in taxes, all included. But billionaires pay less than 20% of their income in taxes, all included. So in fact, billionaires have the lowest effective tax rate of all social groups in the US today, the lowest. Low-income people, they pay payroll taxes, they pay consumption taxes in many states. Billionaires only pay the corporate tax for the businesses that they own and the individual income tax, but the corporate tax has been slashed in 2018 with the Tax Cuts and Jobs Act, and also eroded by widespread tax avoidance by multinational companies shifting profits to tax havens. And the individual income tax largely fails to tax the super rich because they can find ways to report relatively little taxable income. And so these are the two critical, crucial facts. Wealth inequality has exploded, and at the same time, the super rich pay less than other social groups in taxes. That's just not sustainable. This lack of progressivity fuels inequality. And the simplest, the most logical, the most powerful way to stop that spiral, this snowballing effect, is to have a tax on wealth itself.
Thank you very much for that response. We're keeping our eye on the clock right now, and we want to, as you're getting ready to jump to another meeting, thank you so much for being with us, for spending this hour with us. It seems as though it was an hour so well spent. We feel as though we're much better informed and ready to take action. And I want to thank you so much. We're going to also, once you leave, go to one of our members who has a final question. We're going to get that on the record. And do you think it might be possible to ask you that question in an email message and get a response from you? All right.
Yeah, no problem. Yes.
Professor Zucman, thank you very much. The next time we talk, we may focus a little bit on how we can also improve things in France and in the European Union, because this is a global problem, I guess.
True. Yes. All right. It was a pleasure. Thank you so much for having me.
Thank you.
Take care. Bye-bye.
Ronald, we are sorry that we came up against the end of our time for spending with Professor Zucman, but we would like to ask you, please, to ask your question right now, and we want to forward it on to Professor Zucman.
Well, okay, that's very nice. Yeah, I'm one of those guys affected and left Germany 48 years ago. I think you can hear it. English is a foreign language for me. I wanted to ask him how far this idea is developed, how to prove that you left the US such a long time ago, because then you got foreign documents, foreign papers of any kind. Papers are getting difficult to read. So how to prove that you're either not wealthy or have left the US a long time ago?
Excellent, excellent question. That gets us into the weeds and where we need to be in order to make this successful. With I'm going to use something like, I don't know, executive privilege to suggest that we continue with the recording just a few minutes more to take more questions that we might address to Professor Zucman. If there are any of you who would like to just use that star hand up tool, and we'll continue for another 5 or 10 minutes, beginning with Rebecca Lammers.
Oh, hi guys. I just wanted to say thank you again for hosting this event. This was really fabulous. And as you heard from the other team, the other members of the Taxation Task Force, a lot of the things that Professor Zucman said is very much in line with the thinking of the Taxation Task Force at the moment. I just wanted to add that based on my recent experience, I'm still in the States right now. I just came back from I personally did over 45 congressional meetings over the last week and a half, getting direct feedback from members of Congress. And unfortunately, as much as things work on paper with policy, the practicalities and the actual implementation are sometimes two separate things. But I think we're definitely on the right path here in terms of the thinking. If we can get the policy make sense on paper, then we can then work through the political and the implementation aspects of it after. So all of this was really great, and I'm sorry, I don't have a question. I just wanted to say that that this was great, and thank you again for hosting this event.
And thank you, Rebecca, for your great work as chair of the Taxation Task Force, and also while juggling so many balls, helping us to get these great prepared questions on board for us today. And we do have the sense that Eric might have a follow-up or another question he would like to ask. Eric, would you like to chime in? I'm not hearing or seeing Eric chime in right now. Meryl Oates also has the hand up. Meryl, take it away.
All right, thanks, Bruce. My apologies. I had to join the session a little bit late. It was out, but I just wanted to check in and see if there was a sense that that Professor Zucman had addressed the residence-based taxation question, or if we thought that there was more that we could do to maybe consult with him around that. I know that there's a lot of debate. Obviously, there's a significant legacy of advocacy for residence-based taxation within Democrats abroad, but I think a number of us have been asking to rethink this, to look at it closer, and to assess if that's a policy or if that we really want to continue to strongly advocate, or whether we should begin looking at alternative ways of addressing this kind of taxation. Particularly what he did address there towards the end was the tax simplification, which is obviously something that would directly and immediately benefit all Americans living abroad, as opposed to what I see as the idea of residence-based taxation being something that is so far out there that is not going to be altered by the IRS or by Congress anytime soon. It's a nice idea, maybe, but that we really ought to be focusing on very practical new tax initiatives that would directly benefit Americans abroad. And I believe we've had some very productive discussions with Rebecca and her team in advocating for things that are much more immediate and much more likely to have an impact.
Meryl, Professor Zucman took us into a new space, and I think many of us are pretty excited about entering that, where we consider less citizen-based or residence-based taxation, but a new much more simple approach that has to do with amount of time spent in the United States, amount of wealth accrued in the United States, and a kind of a simple three category way of looking at it with 10 slides that we're going to share with everyone. And instead of explaining that more right now, I'm going to say, I think we're all pretty excited to think in somewhat different terms about this, a kind of simple logical approach. And I see that Ed, wait a minute, we have a queue with Sue and then Ed. Is that right, Sue?
Yeah, I think that's right. Although I'm the person who said that was the cue, so I don't know if you can trust me. But my question has to do with our right to vote, and I know that that in the U.S., officially taxation, and whether you owe your taxes or not, and your right to vote are separate, are separate things, separate departments, not connected. Then again, we also, sort of know the battle cry of taxation without representation, and so I guess I don't know if if this is really in Professor Zucman's area of expertise, but I would be interested in the taxation, in the potential interplay between the proposal he brought forward and our desire to continue to be able to vote and be full active citizens in the US. So I'll just want to get that question on record. Thank you.
All right, we're getting things on record, and we also have Ed who would like to ask another question. And I'm going to put in a plug for Max Dunitz to get back, because he also has been thinking a lot about this. And if he has a question or a comment too, I sure would like to hear it. But first, Ed, take it away.
Hi, I just want to point out that right now, well, before I talk about right now, I was very heartened to find that Zucman was very much aware of the problems that people outside the US who are American citizens face with the present setup. And his suggestions deal with that while maintaining citizens, some form, modified form of citizens-based taxation. What concerns me is that Democrats abroad, its official position right now is that we get rid of citizens-based taxation completely in favor of residence-based. And the damage that can do would be to put $5 trillion from the top 1% of upper income Americans into question. We cannot be associated with this. I suggest that we work with Zucman and the tax committee to change our official position, and so that we are not aligned with the Republican tax people on this particular issue.
Thank you very much, Ed. And it looks as though our queue is still alive. And Suzanne, you're the next in queue in the line. Go ahead.
Okay. So I've heard some great questions, so I thought I would jump in. So first of all, going back to Sue's question about linking this to voting. And Rebecca, interesting to get your input as well on this, but I think that all of us in the Taxation Task Force have the sense that when it comes to the fear that is instilled in people and the uncertainty, the unpredictability, the penalty as revenue model that comes from US taxation of persons living abroad, it is so bad that it has become being a US citizen has become something that, and and you say, well, it's a second-class citizen. And at the beginning of the session, it was mentioned we want to ensure that there is equal treatment as is promised by the Constitution. This also includes with respect to geography. I was very encouraged that the new commissioner of the IRS, in his response to the research paper out of Stanford that was looking at the inequality in the algorithm that choose who to audit, made a point of mentioning geography. So everybody here, just because we live in the US, we are not second-class citizens, we are not criminal, we should not be criminalized. But then a lot of people don't vote because they are afraid because of taxation. So if we fix this by figuring out where you want to have extended taxation and where taxation just doesn't really make very much sense, then people are going to vote. And by the way, for Democrats abroad, I would like to suggest that we use the pain and the misery and, let's talk about regressivity. Taxation of US persons living abroad is the quintessential example of regressivity. And we need to fix it. And this is bad enough that we could actually get our voices together. So we need to make it happen. In terms of Ed's point that, if we go too casually toward residence-based taxation, then we risk leaving a lot of money on the table. So I have studied the data, the IRS data from 2020, and we find some things that let us approach this as in a somewhat nuanced way. And so of what the 2020 data shows for people who are filing from a foreign residence address, including the military who are stationed abroad, is that 60% of people filing taxes, 60% of the tax returns filed had zero tax liability. Now, all of you know that those 60% represented $1,000 to $2,000 of compliance costs, much of which compliance was incorrect and came with the fear of you get something a little bit wrong. Oh my goodness, my PFIX, my 3520, it's wrong. That is a massive waste of money that brought nothing to the US. And then when you look at what actually was paid, it was only 6.4 billion, only 6.4 billion. Because of course, by the time you've squeezed out the taxes that other countries, because most of us live in places that tax us more than the US, then there's not that much left over, except for what falls under double taxation. And then it is also quite shocking to look at the Treasury Inspector General of the IRS's report of the auditing the IRS on FATCA. You have this group of, wow, we found 330,000 accounts and we have the taxpayer identification number, and that should represent a minimum of $3.3 billion. You guys go get it. But by the way, we finally I'm going to be a little sarcastic here. I can't help it. But we finally started doing some reasonable data science. We found for 2018, 1,205 individuals. And these individuals, we now see, understated the balances that they reported by a small amount, $157 billion, okay? And this $157 billion accounted for 95% of the underreporting for 2018 for the people for whom they had a taxpayer identification number. And so you would think that this would be 1,205 willful penalties, not only the $10,000 that, for non-willful, but, you don't just forget to report $157 billion, at least I don't. There were no penalties. There was no revenue. There were education letters sent to 835 of these people. 49% of these letters received a response. This means that if you are of ordinary wealth, you can't defend yourself, you don't have $157 billion to forget to report, then you get a penalty slapped on you that is going to change your life. But if you are one of the ultra wealthy, you get an education letter from the IRS that does not require a response, and no money was brought in. So when we talk about progressivity and regressivity, it's not only about the amount of money. It is also about how people get treated. And so we need to fight so that we as a group are pulling together. We're standing behind the people who have gotten hit with penalties. We are standing behind the people. I mean, Rebecca has the most incredible, Rebecca can make you cry with the stories that she's heard. People considering suicide, people renouncing it, 75 years of age, because they just can't do it. So anyway, I could go on, but I'll stop.
Suzanne, I am so happy that we have kept this recording going because the questions and comments are excellent. And I think we're understanding even more the potential for trying to lessen the pain, lessen the number of stories like you're saying. If we can do something like Professor Zucman is suggesting, to take that fear and stigma away from something, it just doesn't have to be that way. And over to Max for what could be getting us into the final comment category.
Oh, I had a few questions for him, sort of, but I just to add to the discussion we were just having, I would say that on the one hand, citizenship-based taxation works out pretty well for me because I make like minimum wage in France. The US doesn't really care about taxing me, but I get refundable tax credits in the US in addition to Macron's anti-inflation equivalent check. So the problem is you do have the fear of oh crap, what if well, first you have to dig through which free filing service actually is free that year, and do you have to port all your documents over, and then oh crap, did I do something slightly wrong? Am I going to get hit with a penalty or something? That I think is the troubling part. So if we can work to make how can we make life simpler for people in France without trying to push a massive change in our tax system. Sorry, did I say France? Anywhere abroad, without trying to push a massive change in our tax system, because as Professor Zucman said, this is going to be a massive pedagogical effort. It takes many years to get people to sort of accept new ideas. And what are things that we could potentially advocate for in the interim, not just on the filing relief side, but also on the taxing the rich side. I know that President Biden's budget had the minimum tax on billionaires, which Joe Manchin supported and sort of called a patriotic tax. There's the Wyden plan on capital gains withholding that Zucman's research informed, and I think these sort of things are steps toward wealth tax that maybe a lot of people have fears about how John Roberts would view a wealth tax, but capital gains taxes he probably sees as constitutional. The other thing that's I'd like to hear more about is multilateral agreements. In particular, last night or yesterday, Switzerland voted to join this 15% minimum corporate tax, and raising corporate tax rates is a key way, in addition to wealth taxes, to actually make the rich pay some taxes. And we've seen the Biden administration somewhat successful. The CRS is another successful multilateral approach. What steps can our elected officials take specifically to move toward a global tax on ultra millionaires or billionaires, so that the vast majority of countries, billionaires cannot escape, can pay no tax, just like we're starting to move toward a system where in the vast majority of countries, corporations have to pay some tax. Now, obviously, both of these proposals need to be strengthened. The minimum tax needs to be strengthened, but we need to think about how our efforts can induce other countries to join us. And I'd like to hear more about what specific, smaller, concrete steps we can take, because completely transforming the global tax system is like a great academic exercise, and you can convince a lot of people about it. But when you actually talk to politicians, they like to build on things that are familiar. So how do you get something that's exists that you can expand? So that's what I'd like to hear more about. Yeah, that's all I have for questions.
Thank you, Max. Oh, sorry, Bruce, go ahead.
I'm just turning it over to Sue and Daniel now to wind us down and take us out.
Oh, thank you. Well, before Daniel makes some announcements of upcoming things with the Progressive Caucus, I just want to share that if people are looking to take action on the issues that we've been talking about today, my first suggestion would be to look into joining the Taxation Task Force and getting involved there and providing some support. It's a very effective group. I think you heard they've been lobbying all this past week in Washington. Maybe lots of folks still on the call are members of the Taxation Task Force. I know this is a topic of interest to everyone. And of course, in the Progressive Caucus, we have lots of volunteer activities as well. And we will need someone to help us capture the questions that have been put forward for Professor Zucman's consideration. So I might ask if maybe some folks in the Taxation Task Force know of some members who will be watching the video. Maybe there's someone who loves to take a transcription and could put those together for us. And then I think we'll move on to our closing announcements from Daniel. Thank you, everybody.
All right, thank you very much, Sue. I do want to just mention that I have done my best to set up a little bit of a document with the questions that have been asked. I do need, if Meryl might be so kind as to type to me the question that you had asked, it would be great, and that would help round out the questions that we'll be sending to Professor Zucman. To wrap up, we do want to share some of the upcoming events that the Progressive Caucus is both organizing and or co-sponsoring. So on June 24th, we want to highlight the event with Tammy Baldwin, the senator from Wisconsin and a progressive champion. She will be speaking to Democrats abroad on June 24th, and we'll drop here the link. I think we're going to get those links dropped.
Daniel, I'll pop them. Daniel, I'll pop them in the chat.
All right, thank you very much, Sue. So you'll see those links appear if you'd like to or I should say attend the June 24th event with Tammy Baldwin from Wisconsin. And then we also want to highlight the event on Saturday, July 1st. We'll be having our Pro-DA monthly members meeting. And then on June 29th, so June 24th, July 1st, and then back to June 29th, we are in the Reparations Task Force organizing for the both passage of a commission, as we mentioned, as Antar mentioned to us earlier in the session, and we are advocating in the Reparations Task Force for the passage of a commission to study the case for reparations for Black Americans. And the RTF, the Reparations Task Force, will have its monthly organizing meeting on June 29th. So if you'd like to attend that, please do RSVP to the link that you will see in the chat. And then on Monday, July 31st, so the end of next month, we will have our monthly Monday, and that will focus on the fact that trans rights are everyone's rights. And so we'll be attending that event. If you'd like to, it'll be Monday, July 31st, same time, will be 12 p.m. Eastern time. And that link should appear in your chat rather soon. You'll see a link to the Progressive Caucus event page. And so that is our next to last event. The very last event that I will mention is the August monthly Monday, or August 28th monthly Monday event. Will be focusing on the unfinished business on the road to success in 2024. So Monday, August 28th, again, 12 p.m. Eastern time, we'll be talking about the unfinished business on the road to success in 2024. And with that, I want to say thank you to everyone for your attendance and your efforts in participating today. And I will turn it back to Bruce for a quick thank you and goodbye.
Well, I'll say thank you and goodbye and end